Welcome to Business with Louis, the show where we dive into the world of entrepreneurship and explore the concepts, strategies, and insights that can help you succeed in business. Today, we're going to talk about accounts payable optimization, a critical practice that can have a significant impact on a company's financial health and competitiveness. So, what is accounts payable optimization? Simply put, it's the process of streamlining and improving the way a company manages its accounts payable, which includes everything from invoicing and payment processing to supplier relationships and cash flow management. By optimizing accounts payable, businesses can reduce costs, improve efficiency, and strengthen their relationships with suppliers. The concept of accounts payable optimization has been around for decades, but it's become increasingly important in today's fast-paced business environment. With the rise of digital technologies and global supply chains, companies need to be able to manage their finances and operations with precision and speed. By optimizing accounts payable, businesses can stay ahead of the curve and achieve a competitive advantage. So, what are the core principles and theories behind accounts payable optimization? At its heart, it's about understanding the flow of cash and goods within a company and identifying opportunities to improve efficiency, reduce waste, and build stronger relationships with suppliers. This involves analyzing everything from payment terms and invoice processing to supplier financing and supply chain management. One influential thinker in this area is Michael Porter, who developed the concept of the value chain. According to Porter, companies can create competitive advantage by optimizing their internal processes and building strong relationships with suppliers and partners. By applying this concept to accounts payable, businesses can identify areas for improvement and develop strategies to optimize their operation. Another key principle is the idea of working capital management. This involves managing a company's short-term assets and liabilities to ensure that it has enough cash on hand to meet its obligations. By optimizing accounts payable, businesses can improve their working capital position and reduce their reliance on external financing. Let's take a look at some real-world examples of accounts payable optimization in action. For instance, Walmart, the retail giant, has implemented a comprehensive accounts payable optimization program that includes automated invoicing, payment processing, and supplier financing. By streamlining its accounts payable processes, Walmart has been able to reduce costs, improve efficiency, and build stronger relationships with its suppliers. Another example is Coca-Cola, which has developed a sophisticated supply chain management system that includes real-time tracking and monitoring of shipments, inventory levels, and payment processing. By optimizing its accounts payable processes, Coca-Cola has been able to reduce its working capital requirements and improve its overall financial performance. So, how can you apply accounts payable optimization in your own business or career? Here are some practical tips. First, take a close look at your current accounts payable processes and identify areas for improvement. Consider implementing automation technologies, such as invoice scanning and approval workflows, to reduce manual errors and increase efficiency. Second, develop strong relationships with your suppliers by communicating clearly and paying invoices on time. This can help you negotiate better prices and terms in the long run. For instance, you might offer to pay invoices early in exchange for a discount or consider implementing a supplier financing program to improve cash flow. Third, don't underestimate the importance of analytics and reporting in accounts payable optimization. By tracking key metrics such as payment processing times, invoice volumes, and supplier satisfaction, you can identify areas for improvement and make data-driven decisions to optimize your processes. Finally, consider leveraging technology to streamline your accounts payable processes. There are many software solutions available that can help automate tasks, reduce manual errors, and improve cash flow. For example, companies like SAP and Oracle offer comprehensive accounts payable systems that integrate with existing accounting software, making it easier to manage invoices, payments, and supplier relationships. In addition to these tips, it's also important to consider the role of blockchain technology in accounts payable optimization. Blockchain can help increase transparency, security, and efficiency in payment processing and supply chain management. By using blockchain-based systems, businesses can reduce the risk of errors, fraud, and disputes, and improve their overall financial performance. In conclusion, accounts payable optimization is a critical business practice that can have a significant impact on a company's financial health and competitiveness. By understanding the core principles and theories behind it, and applying practical strategies and tools, businesses can streamline their accounts payable processes, reduce costs, and improve relationships with suppliers. As my experience with market cycles has taught me, every great business starts with a solid foundation in financial management. That's it for today's Business with Louis. Be sure to like, share, and subscribe. And remember, every great business starts with action. Make your next move count.